Hi all, this is Sanoob here. So today I'll be explaining to you a concept called as ETF or exchange traded fund. Many of them will be knowing what is a mutual fund. Okay, many advertisements have been rolling out in the recent years saying mutual funds sahi hai and all have to invest in mutual funds to get compounded returns in the long run. Many celebrities do the advertisement for this, but most of them are not aware of a similar product called as ETF or exchange traded fund. So what is a mutual fund? Everyone will be knowing that mutual fund, it consists of a fund where small investors like us pool in money starting from rupees 500 and we collect a lump sum amount which is given to an AMC company like ICICI, Birla or DSP, BlackRock. So that money is given to them and they invest into a set of assets. Okay, it can be equity shares or it can be debt or a mixture of both. Okay, so this is a mutual fund. So what is an ETF? ETF is similar to a mutual fund. Consider this as an ETF. This is a pen holder. Okay, it's a basket. So it has a whitener in this, a marker, a stapler. It has everything except a pen. So consider this is an ETF and there is a mixture of assets in here, and this ETF will have a price. And the advantage of ETF compared to a mutual fund is that ETF can be actively traded in stock market, whereas mutual funds cannot. So that is a basic idea of what is an ETF. It is similar to a mutual fund with the same characteristic of mutual fund, but with more flexibility. So I'll just say the differences between a stock, ETF and a mutual fund. Okay. So first similarity between a stock and an ETF is that, like as I said before, it can be actively traded in stock market during Monday to Friday, 9 to 3:30 p.m. You can actively trade it like a stock itself. It is listed in the stock market, whereas a mutual fund cannot be traded in stock market. And we are able to give orders at a specific price which we like, whereas in mutual fund we cannot do that. Mutual fund, we have to, when SIPs happen, we have to buy it on that specific date on the NAV which is fixed by the mutual fund company. And the prices of ETF and stocks is definite. It is well known, but a mutual fund's price will be known only at the end of the day. And diversification is possible in mutual funds and ETF. As I already said, mutual fund and ETF consists of a basket full of stocks or any other assets. It's a mixture of assets of different risk and all. So diversification is possible, whereas in stocks diversification is not possible. Intraday trading is possible in shares as well as ETFs, but in mutual fund intraday trading is not possible. And one more advantage of ETF is that there is no exit load. Mutual funds, many of them will be knowing that if you are investing in mutual funds and exiting within a year, 1% will be taken by the AMC as exit load. So there is no exit load in ETF. So what is an ETF exactly is, ETF is similar like a equity share with the characteristics of a mutual fund. So it is a combination of the characteristics of mutual fund as well as an equity share. So that is ETF or exchange traded fund. In an exchange traded fund, when you are buying it from the market, you are buying it from another seller just like us. Okay, so there are small investors. Whereas in mutual fund, when you are investing it, we are investing the money and giving it to our AMC company, which in return gives units with respect to the NAV value. Now we will get into what are the different types of ETF. There are 4 different types of ETF. One is equity ETF. Equity ETF is like equity mutual fund where the ETF invests in a set of equity shares. Next is debt ETF. Debt ETF is similar to a debt mutual fund where the investment is basically made on debt papers and corporate bonds, etc. And there is gold ETF. Gold ETF, we all be knowing they are investing in asset called as gold, and based on the prices of gold, the prices of this ETF will go up and down. And there is world indices ETF. We all know that in India we have a stock market called as Sensex and Nifty. Similarly, in other countries also there are many stock markets. You have Nasdaq, you have Hang Seng. So there are ETFs which is listed in Indian market which invest in other stock markets indices. So if the Chinese markets goes up, our Indian listed ETF goes up. If NASDAQ goes up, our Indian listed NASDAQ tracking ETF goes up. So I'll explain it to you more on that with the screen recording of different types of ETF. So this is the NSE's website where you can see the details of the ETF launch. So here you can see the list of ETFs launched on NSE. So as I have said earlier, it is divided into 4 categories: equity, gold, world indices and debt. Here in equity, you can see on here there is a issuer name, and you can see the name of the AMC which manages this ETF. You can see Edelweiss, ICICI, Prudential, Kotak, etc. And the most famous one and the highly traded ETF is one of Reliance. It is managed by Reliance, or it is called as Reliance ETF Nifty Bs. Okay, so it tracks the Nifty 50 index of our stock market. So the unit of this cost 130.6 for a unit. So in order to buy that in UPSTOX, it is similar to buying shares. You can see here we can add gold. You can add Nifty Bs like this. Similarly, how you add a share, and you can directly purchase by filling the number of quantity and clicking buy. So this is how we buy the ETF. And similarly, you can see other gold ETF which invest in assets of like gold. So many of the AMC companies are having gold ETF, and the most famous one is Gold Bees, which cost around 45 rupees for a unit, and this is also managed by Reliance Nippon Asset Management Company. So these are the gold funds which tracks the price of gold and goes up when the price of gold goes up and goes down when the price of gold goes down. Similarly, there is world indices. Okay, many of them have been asking me how to invest in foreign stock market, foreign shares and all. In due course of time, there will be a platform by most of the discount brokers where we will be able to buy direct equity from international markets. But the most easiest way is to buy ETF which invests in foreign market. So we have Motilal Oswal's most shares Nasdaq 100, which tracks the Nasdaq 100 index. The symbol is N100. So you can just add that in UPSTOX. I've already added this N100. You can click on buy. One unit costs 871 rupees. You can give the number of quantity needed and click buy. So this is the world indices, and also there are many sub indices which is listed under Nifty, and there is also a Reliance ETF Sharia Bs index which invests in companies which is halal, and similarly there is debt ETF also. So I think most of them might have got a picture of what ETF is. I'll give a link to this website in the description below. And when it comes to cost, mutual fund is expensive because it is actively managed, whereas an ETF is not. So the cost of ETF is just 1/3 of that of mutual fund. Whereas when you're buying this ETF, there will be brokerage charges based on your brokerage, but in mutual fund there is no brokerage charge when you are buying it. And so the advantages is that we can easily trade like stocks. The price is finite, it is full transparent, and there is no exit or entry fees associated with an ETF. So those who are investing in mutual funds, it is for long term. Many of them will be knowing that, but those who like to get some returns in short term, or if you like to find a better way to invest in gold, it is ETF is the way. And there are some disadvantages like tracking errors, where it literally means that if the asset under the ETF goes up, then the value of the price of the ETF will go down. It is basically because of the transaction charges and all other charges which is happening in the ETF, but it is not that much. It is only up to a small extent, so we can just forget that. Then there is a liquidity risk. So unlike stocks where there are many buyers and sellers, ETF won't be having lot of buyers and sellers. So there is always a liquidity risk. When you're selling it at a market price, it may go down it may get sold off at a much lower price. So this is the advantages of ETF over mutual funds and why you should invest in ETF. So if you'd like to invest in ETF, you just need a Demat and trading account. In order to start a free Demat and trading account, you can start by clicking on the link in the description. You can start either in UPSTOX or Zerodha. Both the accounts are free of cost. If you have any doubts, feel free to ask. Thanks a lot for watching. Do subscribe to my channel. Thank you.